Welcome back to DHN. We need to talk crypto. Last night, Coinbase's CEO, Mr. Brian Armstrong, he sent out a tweet that stated he heard a rumor that the SEC may be banning crypto staking for retail investors. Now, for one, from a technical perspective, I don't think this is actually possible. You can't restrict someone from using their own personal device. However, this story, as you can see, he sent this out at 6:10 last night. It is still a developing situation. I just got word that there will be some kind of announcement from the SEC at around 2 p.m. today. So if you are catching this video after the announcement, what I'm also going to share with you is where I think this is heading. All right, because the discussion around crypto securities and the SEC, it's being really, I think it's being taken the wrong way because of all of the talk around XRP and Ripple. And that's not a bad thing. What I want to show you in this video are some elements to this story that aren't being publicized. Now, if you don't know, pretty much the SEC has stated this before, that cryptos that allow staking could be classified as securities under the Howey test. This would include Ethereum because they are making that switch to proof of stake, and that is set to happen in March, which is another reason why I think this discussion is rising to the top of the headlines. Now, another factor that I think is playing into this is the amount of money. The value of staked assets was about $42 billion in the fourth quarter of 2022, with annualized staking rewards sitting at $3 billion. Now, these numbers come from a report by Staked, which we have here. This is in collaboration with Kraken, which is another exchange that the SEC is investigating for the same reasons. But you can see, even in a bear market, look at these numbers, folks. 190 billion coming from the top 35 proof of stake assets, 42 billion staked, 3 billion staking rewards, 23% of the total market cap. That is also very significant. Another thing that this report shows us, guys, is a list of the top staking chains. All right. And you can see here Ethereum, Cardano, Polygon, Polkadot, Tron, Solana, Avalanche, Cosmos, and Algorand. Okay, these are, and then you'll see Tezos here too. This document here, State of Staking Q1 2023 by Staked and Kraken. You can simply Google search that, get access to it. I am working on a blog too for the channel, so that way we can document all of the stuff that I find, because I find too much, guys. I find too much. I can't put it in shorts. Anyway, you can also see Kava, Helium, Oasis, Harmony, Icon, Audius. Keep an eye on that, guys, because the reason why Audius stakes is to ensure that artists get rewards. This is valuable information because these projects, they perform so well because of the staking aspect. Okay, so that's just the staking side of it. And I just told you how the SEC is looking into Kraken. They are reportedly facing an SEC probe that may set an impactful precedent for crypto regulation. Bloomberg reported an investigation into Kraken's offerings to American citizens, some of which the SEC deems to violate securities laws. So they're pretty much talking about Kraken's staking programs and lending programs. If you're overseas, it'll be marketed to you as a lending program. But if you're in the US, it's oftentimes marketed as a staking service. So again, it gets deeper, guys. This is from Crypto Slate. This isn't the first time that the SEC has focused on staking, and it's always been around Ethereum's move to proof of stake. As we can see here, he also referred to an earlier debate that took place as Ethereum transitioned to a staking model last year. One argument against regulation at the time said that staking involves no common enterprise or intent to gain profits solely from the efforts of others, two criteria that are required for investment contracts to be regulated under securities law. Coinbase also faced scrutiny from the SEC over adjacent interest-bearing products. It canceled its lending product after the regulator threatened charges in 2021. This I do remember, and Coinbase is still trying to fight for that lending product here in the United States. Now, I do want to mention the fact that I am not a proponent of either side here. I'm not saying that the SEC is right. I'm not saying that Coinbase is right. What I am here is to lay out all the facts on the table and then let you make an educated decision. Because, like I said, this discussion has been around for a minute. Let's go back September 15th, 2022. SEC's Gary Gensler says staking may turn crypto into securities. And in this article, courtesy of Payments, it really gives us the clincher as to why I am not on either side, why I'm not pointing any fingers, because the result of a crypto entity being verified, that's the key word there, verified as a security, is that they have to file a different form of paperwork. That's going to be the worst thing to come out of even the situation with Ripple and XRP. Ripple, or the XRP token, would just have to file paperwork with the Securities and Exchange Commission. It would not stop XRP from being used. It would not stop it from being traded either. And it would not stop institutional or retail investment. And I'm going to show you why. I found that out by reading this right here from October of last year, written by Nicholas E. Gonzalez, Fordham University School of Law. Now, this is a very long document, but I pulled the most important paragraph, in my opinion, from the end of the essay. They mentioned how the Howey test is going to be the crucial criteria that they would use to decide whether or not a staking arrangement would be considered a security. There is a loophole to this, though. Okay. And he's going to describe it at the end of this paragraph here. An analysis under the 33rd Act, interesting, demonstrates that staking arrangements are likely investment contracts. A federal court may find that a staking arrangement is a contract, transaction, or scheme whereby a person invests his money in a common enterprise and is led to expect profits solely from the efforts of the promoter or third party. Further, staking arrangements will not likely find exemption under maritime, because they are not unique and often characterized by a large amount of risk offset by a large return. Despite the likelihood that staking arrangements will be deemed investment contracts, node managers may utilize registration exemptions under Rule 506C or Regulation A. Let's take a look. Regulation A provides for registrants to register under Tier 1 or Tier 2, capping the amount of offering can raise within a 12-month period, 20 million and 75 million respectively. Tier 2 registrants have further limitations on the amount non-accredited investors can contribute. That is how I think the system is going to be set up. You can see here, Tier 1 or Tier 2. So if you're in one of those, if you're in a Tier 1, you have a limit of, we can imagine, 20 million for non-accredited and 75 million for accredited investors. That doesn't close the door to anybody. It just establishes a firm guideline, firm benchmarks, which, in order for the commercial adoption to occur, these type of things have to happen. Now, additionally, the portion of the aggregate offering price attributable to secondary holders of the security may not exceed 30%. With this exception, large and small exchanges and independent staking pools, DeFi, are likely to meet Regulation A exemption requirements as long as exchanges and staking pools meet the Tier 1 offering cap of 20 million and limit a potential secondary market. They would not have to file supplemental disclosures or expend the cost of verifying with the SEC about their non-accredited investors. So, in essence, guys, because I know that was a lot, simply, this situation here is leading into something major. And what I think that is tokenized securities. Now, before we get into what tokenized securities are and how deeply related to the situation it is, I want you to hit that subscribe button for me, especially if you're new, because it takes a lot of time to put this information out and try to get it to you on a daily basis. But this is what I enjoy doing, and I really wouldn't change anything in the world. So if you want to keep rocking with me on this journey, hit that subscribe. If you already are subscribed, step on that like button, and let's keep it pushing. So the reason why I feel like tokenized securities are the crucial component, the next step to all of this, is because of what they do. Tokenized securities are when ownership of a security is materialized through the issuance of a token that is registered on a distributed ledger infrastructure of a blockchain. A tokenized security can be equity, a bond, or an investment fund. A tokenized security is essentially this blockchain based tradable financial asset that can represent an investment in another asset. It is this piece here that I feel is going to shift the direction of the market, because once a decision is made by the SEC, it's going to accelerate the tokenization market. Okay. And one of the biggest, the biggest projects that's going to benefit this one, LCX, who just yesterday, it's funny how this story came out at the exact same time. LCX has now been approved by the European Economic Area to issue tokenized bonds, and you can get a 7% return in the euro. Now, if you know about LCX, what they issue tokens, how they issue tokens is through the Liechtenstein protocol, which is a global protocol standard for issuing digital securities, ladies and gentlemen. And it's funny because when you go and look up securities exchanges, all right, when you look up the word securities exchanges, you get a few different things. One, there's Coinbase. Interesting, right? And then I have another list here. This one is from 2019. It's a bit more detailed. You have a list of security token exchanges. Now remember, tokenized securities are simply digitized versions of debt or financial instruments. Okay, so T0, INX, ISTOX, Uniswap is listed on there. So again, that shows you this does not just apply to centralized exchanges. We have security token exchanges in development. Again, this is coming from a 2019 report, but a lot of these exchanges have already launched. The Boston Security Token Exchange, that was one that we covered on the channel because it had a lot to do with the Federal Reserve. There was a lot of Federal Reserve Boston members involved with that exchange. Goldman Sachs, JP Morgan, the big guys, they were all moving money around through there. So, hey guys, real quick, I know this is weird, but while editing, I noticed a very important detail that I completely overlooked. You'll notice that the Boston Security Token Exchange also has an exemption under Regulation A. Interesting. Let's get back to the video. And then Securitize. Securitize is a very, very big project, okay? And it's got like, I want to say Andreessen Horowitz, Mike Novogratz, like big players behind Securitize. Just give them a look. But yes, you can see, guys, and there it is again, Coinbase. Interesting, right? So as I'm looking through all of this stuff, I'm also thinking like, Mr. Armstrong is trying to stir the pot. He is really trying to stir the pot. Now, this is another report that I stumbled upon. Security Token Advisors, State of Security Tokens for 2023. And it's a lot. It's a whole lot in here. And what it just basically describes are the current tokenization, institutional tokenization programs going on. And you can see here, Securitize right up at the top, as well as JP Morgan, Goldman Sachs, Monetary Authority of Singapore, Franklin Templeton Investments, which, as a matter of fact, let me show you this one. Franklin Templeton. After roughly 3 years of pondering where to implement blockchain technology into business practices, Franklin Templeton unveiled the first US-based mutual fund to record and process share ownership and transactions on blockchain, working specifically with Stellar XLM. All right. FTI created the on-chain US government money fund. This is built on Stellar. You can see that the security tokenization market has been moving slowly but surely behind the scenes. INX closes its Ethereum-based IPO with 85 million in proceeds. Bitcoin wallet Exodus to tokenize 75 million in company stock on Algorand. $491 billion asset manager KKR Healthcare Fund to tokenize on Avalanche. Investment manager Hamilton Lane to tokenize 3 funds through Securitize. NYC parent company ICE takes stake in T0 in potential move towards tokenized stocks. Goldman begins trading on JP Morgan's repo blockchain. You want to know who was involved with that one? Aave. It's the reason why I bring it up a lot. Crypto teacher likes to talk about the tokenization of everything. This is what he was getting at, guys. This securities discussion is going to take us into the tokenization discussion. This is one of the oldest exchanges on the market, and they're launching tokenized commodities in which people can use Tether. Bluefin Network adds tokenization through Visa technology. We've talked a lot about Visa this week. We know that they're trying to settle USDC transactions on ETH and Stellar Lumens, as well as other tokenized forms of financial instruments, right? And we've been talking a lot about Stellar. Well, check this out. GK8 now allows clients to control their digital assets as they would their fiat. So basically, GK8 is a custodial platform from Tel Aviv that specializes in DeFi staking, NFTs, trading, and tokenization. Oh, and guess what? Let me show you this too. GK8 integrated Stellar into its custody solutions. So, the same tokenization custody solutions that GK8 is now offering to institutional clients is going to run on the Stellar blockchain. Franklin Templeton Investments also has a tokenization service on the Stellar blockchain. I didn't know which project should have went on the thumbnail to this video, guys, because there are so many. There's so many involved. Okay? So, to wrap this all up, all right? Bring it on back to the beginning. Wrap this all up, ladies and gentlemen. The man stirred the pot. He stirred the pot for a reason. Why would he say this to invoke fear in the market when he has nothing to lose? That is my question. Now, if you would like more information on the Coinbase securities Howie's test story, watch this video on the screen right here. As always, don't forget to check out the links to your DHN crypto journal in the description. You'll also find links to cold storage, self-custody wallets like SafePal and EliPal. With that, I'm Wade Teamer. I'll see you in the next one.